Hello, 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 everybody. It is Friday and it is time to talk live. Well, our market, it's a little crazy. We've got a lot of sellers and a lot of people think we don't have many buyers, but is that really the truth? We're going to talk about it. And I know that there's been some articles that are out there that are talking about how many more sellers that we have than buyers. And we're going to get into that too. And to help me with all this and to join in the conversation, I'm bringing in my friend Matt. Matt, how are you?
Good. How are
Good.
you? Happy Friday.
I'm well. It's Friday the 13th. I did not even realize that until
Uh,
very recently.
I didn't know it until just now.
Right.
Didn't even think about it.
Right. So it's crazy times, right? And it's hot. Oof, man, we've reached some digits.
Yeah.
I'm looking, my watch only says that it's 100, but I know it's hotter than that outside because I was outside earlier.
Right. And if you get in your car, it's like feels more like 120.
Well, that's the thing. My car always says it's like 111 and my watch says it's like 103. So it's never the same because it's like that radiant heat off of the car. So, but well, we got some stuff to talk about because our market is it's funny because I hear all these people saying, we've got too many sellers or, more sellers than buyers. But I have a lot of buyers that really want to move here and, we're looking and we're struggling in some areas. So we're going to talk about all that. And I say this all the time, but as we're talking, those that are watching, if you have questions, make sure you post them in the comments because it helps us answer the questions that you guys really want to know about. So we can talk about all these things, but if you've got a question that you really want to get an answer to, post it in the comments because we would love to answer them.
It's funny. I was talking to someone East Coast yesterday about this exact thing and coming out and buying a house now. And he's like, honestly, if you factor in like the humidity where I'm from and where I live, like I'll take the dry heat. Yeah, it's still hot either way.
Everybody says that, right? All my clients that come from like the East Coast or the Midwest in the summertime, I'll always check on them and just kind of say like, how you doing? Especially the first summer, like how are you? And they all say the same thing. They're like, I will take this dry heat over the gray through the winter, cold, ice, the whole thing. They're like, this is really not that bad.
No, and no tornadoes and no hurricanes.
Or yeah, exactly. And we don't need hurricane insurance, which is a good thing. Right. So I know what I'm finding right now is that I always tell people in my videos a lot. I'm like, if you're thinking about moving here, come in the summer, experience what our summer is like before you really make the move, because it's important for you to really understand how hot we really get. Cause we really do get hot. Everyone's taking me up on it because, I have a lot of people coming right now.
Good.
A lot. Good. So it's great. Yeah. No, it's a good thing.
Well, and just to know that, there's a lot of great areas to live and to each his own. Like there's different parts of the valley that are going to appeal to different, to whatever your hobbies are and what you like to do and families 100%. And all that stuff.
Right. Now, and you have to experience it, right? And you got to see, kind of where do you feel comfortable? I have one I was with earlier today and she was driving. I'm not going to mention names because I don't want anybody to get upset, but she was in one area of the valley and she was driving around. She's like, the last few times I've come, I've driven around there and she's like, I want to like it because I know that it's a nice area. She's like, but I just don't love it. And I'm like, then don't buy there. You won't like it.
No, agree. I mean, and some people like, hey, I'd love to live in like, maybe a busier area, but yeah, there's going to be some bad pockets, like, that you might have to deal with. That's just That's just part of it. Right.
Right.
But no,
yeah. So let's jump into this. This is an article at a Housing Wire, and Redfin has another article. We're going to get into some other stuff about the Redfin article, but this kind of talks about all of it as well. So the housing market sees record seller buyer gap. Redfin predicts home prices will decline 1% year over year by the end of 2025. I gotta be honest. I mean, 1% is not that big.
Yeah. Who cares?
Yeah. So this says the U.S. housing market is experiencing its largest imbalance between home sellers and buyers, with an estimated 1.9 million sellers compared to 1.5 million buyers as of April 2025, according to Redfin. That's a 33.7% gap, or roughly 490,000 more sellers than buyers, and the widest margin recorded since Redfin's data tracking began in 2013. This disparity reflects a sharp shift from previous years. In April of 2024, sellers outnumbered buyers by just 6.5%. 2 years ago, the market favored buyers. Redfin noted that this is the highest number of sellers since March of 2020 and the lowest number of buyers, aside from a brief pandemic-driven dip in April of 2020 across all available records. The number of sellers is measured by active MLS listings, while buyers are estimated using a model based on pending sales and average buyer timelines. Now, I'm going to stop for a second because this is what we have some other information, especially from our friend Tina. How they're getting their data is quite skewed.
Agreed.
Quite skewed. I mean, some of what they're saying is accurate, agree with, but how they're coming up with this big disparity between sellers and buyers, not really agreeing with that. Okay, so the article goes on to say that the growing mismatch was led to increased downward pressure on prices. Redfin predicts home prices will decline 1% year over year by the end of 2025. April's median home sale price rose just 1.6% from a year earlier to $431,931, the slowest growth in nearly 2 years. Again, the slowest growth in 2 years after we just had like this massive rocket ship growth. Like I think you have to be careful with how you read this. So other contributing factors include elevated mortgage rates, economic uncertainty, and the mortgage rate lock-in effect, Redfin explained. Although homeowners have been reluctant to give up the low rates they secured during the pandemic, more are beginning to sell due to life changes like job relocations and divorces. The balance of power in the U.S. housing market has shifted towards buyers, but a lot of sellers have yet to see or accept the writing on the wall. Somebody from a senior economist from Redfin. Many are still holding out hope that their home is the exception and will fetch top dollar. I'm seeing that a lot.
Tons of it. Amen to that. Your home is, guess what? Your home is not fetching top dollar.
No, I know.
That's just not the market that we are in.
Yeah. Bebop says, what's happening with median sale and list prices? We'll get into that because we're gonna pull up the Crownford Report here in just a minute.
It's a good Crawford day. There's a lot of great data to look at. For sure.
There is. It says, I'm also seeing a massive amount of apartments coming online recently. Does Crawford track rentals? I'm imagining there's a lot of downward pricing pressure here, especially in Scottsdale. So they kind of track rentals. They do, but we'll pull it up.
And that I was just reading something this morning. Nationally speaking, there is downward rental pressure.
Yeah, for sure. For sure. I mean, I have seen rental prices, and again, I don't do a ton of rentals, but I have a few clients that own homes, and then I help them find a tenant. I don't do any property management or anything like that. But over the last 2 years, they've had to negotiate more on their price, and that was something that Tina was talking about a year and a half ago.
And it's one of the things that we'll talk about today too, and that is the shelter cost rentals go into that component, and that has helped give the appearance of inflation being more inflated than it actually is.
Right. Okay, so this article goes on that says seller outlook dims. In April, 44% of active listings had been on the market for at least 60 days, the highest share for that month since 2020. Redfin attributes the stagnation partly to sellers overpricing homes based on outdated comparisons. I'm going to stop for a second. I don't disagree with that either, especially because I feel like our market, when it shifted, again, I don't want to say that it shifted fast because it takes a while for our market to shift over. However, it starts happening and people don't realize it. And then it starts happening a little bit more and it stays in that direction, in that shift direction. And it feels as if all of a sudden overnight, oh my gosh, there's this big shift that happened. It's like I was having that conversation with people a while ago, just saying, look, the market is shifting. We've really got to be price sensitive. And buyers the same way, the same thing. Like when I was talking with my buyer clients, I would tell them, we really have to be careful about negotiating on price because The market is shifting, and I don't think it's going to change. I think we're going to keep going in that direction. We're not crashing by any means, but it's shifting. And so we've got to just be aware of that and be price sensitive to that.
Right.
And to this point, the outdated comparisons, because that's the thing too that I see and I'll get, kind of feedback from sellers agents that'll, you submit an offer and then they send back, well, did you see these comps? And I look at comps and I'm like, well, this one's from a year ago.
Right.
This one is 9 months ago. And it's like, an appraiser's not going to use that. In fact, I always try to go back 3 months. Let's see what's there 3 months. If there's not good enough comps in that 3 month period, then I'll go back to 6 months.
Yeah. Which is one of the advantages of investing in real estate in Phoenix versus rural Texas or something, is you're not looking at comparables that are 25 miles away.
Right.
You're usually able to find a comparable, ideally 90 days within 2 miles.
Yeah.
Right. Or usually, even a mile, which a lot of times you can.
Right.
For a lot of homes.
Yeah. So this goes on. It says sellers are already gaining more data points on this front and will likely face another reality check in the summer when demand typically starts to slow, the report says. Past trends support this trajectory. In late 2018, when mortgage rates spiked and sellers briefly outnumbered buyers, home price growth slowed to a 6-year low. A similar trend occurred in 2013 and 2014. The current imbalance exceeds those previous periods, suggesting more price pressure ahead. Buyers overtook sellers in November of 2023 when mortgage rates peaked near 8%. Since then, Redfin noted that buyer demand has remained sluggish even as new listings climbed. I'm going to skip over Florida. I'm sorry if anybody's watching from Florida.
Yeah.
I'm not going to. This is the way I really feel about it. Let's not pour salt on the wound for those poor people in Florida.
Yeah, I know. And let's not. Well, and we won't talk about home insurance in Florida either.
Or California. Yeah. It's a little tough. But so I'm going to pull this up because this is your friend and mine, Tina, went through this Redfin study where the Redfin article actually says the U.S. housing market has nearly 500,000 more sellers than buyers, the most on record, that will likely cause home prices to fall. Again, where they get the 500,000, that's the question.
Well, yeah, because there's one metric that we can easily measure, and that's the multiple listing service, right?
Right.
We know there's this many listings, so thus there's got to be at least X number of sellers.
Right.
We can't do anything like that for buyers.
Right.
There is no metric, really.
That is the thing. Like the only way that you can really quote unquote measure that buyers activity is the absorption rate.
Right.
But that doesn't tell you all those buyers that are still out there legitimately looking for a house, and they're just kind of being a little pickier because they can be, and they can take their time a little bit more. And even though buyers need to move, it doesn't mean that they're just going to go buy anything that they see. They want to make sure that they're buying the right thing. And after how many years of, you see the house for all of 30 seconds, and now it's like, would you like to make an offer? And oh, by the way, you're going to have to offer over $100,000 over the list price. Like buyers are like, okay, I can pump the brakes a little bit and take my time.
Right. I mean, because I'll give you an example. This afternoon, oh, by the way, what's it? Culpeper, Virginia. I am from Stafford, so I know Culpeper, Virginia.
Oh, that's funny. He's moving to. You're moving to. Yes. Jillian is moving to Phoenix in 2 weeks.
I know Culpeper well.
There you go. Welcome.
Well, I mean, what's a buyer? So, like I was talking to somebody this afternoon. Like these parents, they want to buy a house with their kid who can't afford it on his own. His lease is up in December. Maybe if the right perfect thing hits, they're going to buy. Is he a buyer? I don't know. I guess, yeah. I've got somebody that's been qualified since December that they're looking for, they're not really looking. It's just if a unicorn pops up, they might buy it.
Right.
Is that a buyer? Is that an active buyer? Not really active.
Well, I mean, I don't know, because if the right thing pops up, they would buy. That's the hard part, right? So Jillian says we have a short-term rental so that we can be local while we're looking to buy a house. Good idea.
Yeah. And Jillian, we were talking to Sean earlier before we got online, and that is, we have all these great cities. It's just, it's just a matter of like finding your area, where's the best place to live. And starting with the short-term rental is just a great idea. So you really get a good vibe about where you want to live and commute and all that good stuff.
I tell every one of the buyers that I'm working with, I'm like, because they inevitably get worried. Like, here's what we really want in a house. Here's my price point. Do you think we can find it? And my answer is always yes. All we have to do, because again, Phoenix is so big, we need to figure out the location that you want to be in first. Then we can find the house. Like that part I don't really worry about. It's a matter of finding the location first that you love and then drilling down to find the house.
Right.
Because there's so many different places that you can be here.
And, a bigger picture here, when we look at articles like this. So, okay, great. Maybe their methodology is way off. Maybe it's not way off. But what does it really mean? Like, what's the importance of it, right? If you own a home and you've owned it in 2017, does this change your life? No, not at all, right?
Right.
You made tons of equity and you hold on to your house here over the long run, you're still going to make more money. And
right.
If you're a buyer and if it's right, great. There's all kinds of opportunities, and you and I have had some recent success getting people larger percentages off list price than we probably would have even expected to get, right? And I've had this several times in the last week. The most interesting thing that's happened to me in the last 2 weeks is that I've had a couple buyers that have submitted offers on 3 different properties that all got to a multiple counter situation. And on the last counter came from the seller countering back with a minor difference of what my buyer was willing to do. And on these 3 different occasions, my buyer said, I'm good, I'll pass. And on all 3 occasions, the next day, the seller's agent reached back out and said, hey, my seller would like to reconsider.
I've had that happen to me.
That last offer.
Yeah, I've had it happen where, the seller and here's what I see happening. The sellers had the upper hand for so long.
Yes.
And now the buyers, I don't want to say the buyers completely have the upper hand, but I mean, we are in a buyer's market. It's not a gigantic buyer's market by any means, but we are in a buyer's market, and sellers are going to have to negotiate not only on price, but they're going to have to negotiate on repairs. And sellers don't love it. Buyers, I feel like some buyers are feeling like they're going to take advantage of that. And they're like, haha, I finally have you, and sellers, they push back and they push back and they push back. And then they realize, oh, you know what? If I really want to sell this, I really might have to reconsider. Like the one that I got under contract with you as the lender recently, we made an offer. I thought, we're just going to take a stab in the dark at this. I mean, the house has been on the market for a really long time. Still a great house, great location, the whole deal. And they literally came back and said, okay. And I thought, wow.
Are you sure? And I don't remember what the original list price off. I want to say, no, this could be a unicorn, right, for the area and stuff. But wasn't it like 10% off the original list? 9%?
Possibly, yeah, could be.
I mean, I can tell you because I love looking at these numbers. I have one in Gilbert that ends up being 5% off list price. Yeah. Right. So when I see these, like, oh, maybe prices could, like Tina was quoted as saying, prices could potentially in areas go down 3%. Okay. Well, what does that mean to you as a buyer?
That's really funny.
Right.
Look, it was 11% on below list. Thank you, Greg.
Right. Exactly. So thank you. Thank you, sir. Right. So what does that mean? We on a lot of these deals, we're negotiating more than an anticipated 3%. So who cares? And obviously these are most of the people that we are serving are not short-term investors. No, they're not trying to get in and out in 6 months. Right. So obviously they can withstand some volatility, and anybody you and I are helping, for the most part, we're going into it saying, hey, hopefully you plan on keeping this property for 5 years, right? Right. What we know is over any 5-year period you take, you're ahead of the game. For sure. Well, and if you go back to the housing crash in Phoenix, and look at what you bought the worst time. And if you kept that house for 5 years, you probably were okay.
Right. We talked about this, I feel like, one of the other times that we were on, and there's a really, really, I don't want to say well known, but he's a big real estate investor. And he said he gets asked all the time, like, is now a good time to buy? And he's like, my answer to that is always the same. Right. If you can buy now, buy now. If you can do it. If you can't do it, don't buy now. Doesn't matter what time it is. He's like, because what I can promise you is if you buy now, in 5 years from now, you're going to be really happy that you bought 5 years ago. And it doesn't matter, buyer's market, seller's market, whatever that looks like. In 5 years, the market, it's going to appreciate at some point, to some level, it's going to appreciate.
Right. We got a client get under contract this week, and she got the seller to pay off a $29,000 solar lease for closing. And so the equipment is theirs. There's no more lease. They just have to pay the annual maintenance on that, which is like, wow.
Yeah.
It's pretty awesome. And they've already seen the benefits of solar here, which, by the way, guys, if you're, I'm not a huge solar proponent, but if you have owned solar, there's a definite value there for sure.
We'll talk about that in a second.
Yeah.
Jillian says, maybe I'm too much of a New Yorker at heart, but I feel like, yes, if somebody wants X amount of dollars, you offer a little less and you're likely going to get it with the way the market is changing. Yeah. I mean, again, sellers have to negotiate right now. They just do. I've had one buyer recently that, the house came on the market. This was a really unique situation. The house came on the market. They literally had just sold their house, in another state. They were driving here and we were planning on looking at houses the day after they got here. So I was setting up all of the showings and I get a call from the agent for the one house. And I knew that they liked it because they had said I'd sent it to them and they said, this is the one we really, really like. We're really excited to see this one house out of like the 5 or 6 that we were going to go look at. And the agent called me and he said, hey, that house, we got an offer and I think we're going to accept it. So I don't think I'm going to approve your showing for tomorrow. And I said, don't do it. Don't accept the offer yet. And I said, my client loves that house. Is there any, when do you have to respond? And he said, we don't have to respond until tomorrow morning, but my seller wants to respond tonight. And I said, don't respond yet. I said, can I show him the house today? He's like, if you can get him over there today, great. And I said, I don't even know where they are. They're driving into town today. I don't know if they're here yet, but let me find out. They literally had just gotten to their hotel. We met at the house about a half an hour later. They made an offer on the house over list price. And they got the house and they're closing in like a week and a half. Awesome. Showed them one house. They loved it. I mean, but they'd lived here before. So it wasn't, right, it wasn't, they didn't have to learn all the areas. They knew where they wanted to be. They knew what they wanted, and they had to offer over list price for that house, but it was absolutely adorable, all redone in a great location. So, I mean, things like that still happen.
I mean, agreed. Like I had a client that was looking at a Scottsdale townhouse. And the guy literally was looking to dump it.
Yeah.
And he listed it low. And sure enough, he got multiple offers all over, as is, waiving inspections, like all this stuff. It happens. And look, it's not like the barrier to entry.
Oh, you muted yourself, Matt. Yeah, no, right now the market, it's shifting, and summertime for us, this is the one thing that people don't realize too. And a lot of other markets, summertime is the market where their activity picks up, not here. Most people during the summertime, especially if they've got kids, they're like, I'm on vacation, I'm out of here. And in the area where Greg was, or where he is, a lot of those houses, like the house that we got for Greg, it had been taken off the market. And I told him, because I knew it was one that he wanted to look at, I said, let me call the agent, because oftentimes in that area, the homes are taken off the market for the summer, but it's probably still available. And that's exactly what happened.
Right. And
we're not going to know that, then, you wouldn't,
right.
You wouldn't know. You'd be like, oh, the house is off the market, so I guess I can't see it. But you just have to know some of those ins and outs of some of these communities.
Yeah, and we're obviously not giving away the area, but I will say that this is not in the slums, Jillian. This is not. You're not getting 11% low in a rough part of town. Okay, this is nice area.
Oh, I think she's saying, wow, because my clients bought it in a day and they had to pay over the list price. I get it. But yeah, I mean, that was a unique situation. Things like that don't happen all the time. And I'm not seeing it often, but I just knew that with my clients that this house was perfect for them. And if they didn't pay over list price, they were not going to get it. And then they were going to have to settle for something else because they really wanted to make a decision and get into something quickly. So it in the long run, I think it's going to be a fantastic fit for them. I know it's a fit for them, but I think it's going to be great. So
at what point, Sean, do you feel like a lot of sellers, at what days on the market do you feel like a lot of sellers kind of hit that panic button?
You know, it's a great question because I can tell you in the past when we've had higher days on market normals, right? When it's normal to have the days on market higher. These are some of the things that I hear from sellers when they just really don't want to reduce their price. And explaining this, the buyer mentality to them is really hard. But, you know, you'll say, hey, okay, you've been on the market for 30 days, 45 days, whatever that looks like. We need to start talking about, you know, a price reduction. And maybe you've already done a price reduction earlier, which I would suggest. But maybe we've hit that time and, you know, it's time to have that conversation again. And when they really start pushing back, they're like, we've had a lot of showings and the feedback's all good. Why isn't a buyer just making an offer? And I'm like, well, I think they feel the price is too high. Well, then why don't they just make me an offer? I'm like, buyer mentality doesn't work that way because the buyers inevitably, like, they don't want to offend the seller right off the bat. They're like, I don't want to go into this negotiation offending a seller by offering them something that's too low or something that I feel that if I was a seller that I would be offended at. But
I think that mindset is shifting. I really do.
But at the same time, it's like when we look at comps, they're like, but the price there isn't reflective of what it should be. I'm like, I agree. And so that's when I have conversations like with Greg. It's like, you know what? I think it's worth a shot. If you really think that the price is, you know, if we look at the comps and the comps show us that this is what the price should be, I think as a buyer, you have to kind of go, I can't worry too much about the seller's feelings. I should just make the offer. Another really good example, I had another client that, again, the house was on the market for so long that they were on agent number 2. They had done a price reduction. We looked at the comps. The comps should be, it was still probably $200,000 over the list price. Or I'm sorry, overpriced. We made an offer, great offer. They were offended. We were like, okay, we'll just wait. We waited. And this agent, in my opinion, did an extremely huge disservice to the seller because they ended up getting an offer. We were waiting. We were going to call. And then all of a sudden it was under contract. We thought, oh gosh. And they had not done a price reduction. They had not done one price reduction from when we made the offer where they thought that ours was too low. And then it closed $20,000 less than what my client had offered. And what I never got a phone call from that agent saying, hey,
unbelievable.
I just got an offer. It's not very good. Or, you know, it's lower than what your offer was, or lower than what your offer was. Would your clients still be interested in the house? Never got that call from the agent, which to me, I go, that was a disservice to the seller. They just left $20,000 on the table.
Yeah. $20,000 phone call. Like, yeah.
So, I mean, that kind of stuff, like you really have to pay attention, and you have to be able, as an agent too, you have to be able to make that phone call and say, hey, look, I know that the seller didn't love your offer before, but we just got another offer and it's not that great. And I don't know what they're going to do, but your offer was higher. Like, would your client come back and see? Great. I agree with you, Greg. You never know unless you ask. I mean, and this is what I always tell people, like the worst thing they can say is no. Yeah.
And I think especially in this market where even if they are offended, that listing agent is going to do their damnedest to you know, talk them off the ledge and say, look, we can't be offended here. This is just business. Like, if you want to come back, let's come back. Let's figure out what we want a reasonable counter to be. But, you know, just walking away, it's just everybody.
In this market, in my opinion, I don't think it's smart. Now, if you have a house that's listed for $1 million and you get an offer for $500,000, yes.
Yeah, of course.
You know, but I think that when it's in kind of the ballpark, I think it's important to kind of, you know, you got to strategize about it. Like, how are you going to respond? Like, where do we want to go right now with another counter to see how far they'll move, you know? So there's a strategy behind it. but you got to be able to negotiate and see. And again, from the seller standpoint too, if you get a low offer and you kind of counter to see how much more they'll come up and they walk away, you got to be okay with that.
Yeah, it's funny. I was really getting into listening to some Chris Voss videos. Who's the negotiator, former FBI hostage rescue negotiator, and he was talking about just verbiage and how you try to lightly place things where you're not offending somebody in negotiation. And a lowball offer would be a great example of that, where by using certain words, he's able to deliver it where he can not offend. So like, for example, you could say to the listing agent, hey, would it be ridiculous to even send you an offer for $740,000 on this house on Elm? And then they go to themselves, because you're looking for no answers, is what you're looking for. And they go, well, no, it's not ridiculous. I mean, they may say we're not going to do it, but they're going to be like, no, it's not ridiculous. But yeah, I think there's a way to deliver the messaging.
Right. For sure. Okay. I'm going to jump over. Well, I want to share this article, because let me put this up. This one is talking about the buyers gain the upper hand in the Valley housing market. And there's no question, right? The buyers, they have the upper hand right now. Again, they're not crazy. But here's the other thing. I was with Tina the other day in a meeting, and it's a funny thing. She was saying buyers do not like buying in a buyer's market.
Yeah.
And one of the reasons is that they say buyers, when we're in a buyer's market, they're afraid to buy for fear that the market's going to go down. So they were trying to time the bottom. But the reality is that you never know where the bottom was until we're 6 months out of it.
Right. It's just like buying stock. Very few people are ever going to be so lucky in their lifetime to hit at that perfect number.
Right.
That perfect dip.
I mean, I inherently know that because of, working with so many buyers, but it's always interesting to hear that from a different perspective as well. Anyway, so it's a home buyer's market nationally, if you can afford it. And in a few places that's truer than Phoenix, the Phoenix Valley. The big picture, there are nearly 500,000 more sellers than buyers in the U.S. housing market. Again, so they're quoting Redfin. Why it matters. That's the widest gap on record, and a big reversal from just a few years ago when the buyers were desperate to find a place to live, sending prices into the stratosphere. By the numbers, there are 33.7% more sellers than buyers right now. At no other point since Redfin began tracking in 2013 have sellers outnumbered the buyers. So this is kind of just reiterating that. I was going to look for, you know what? Let's just jump into the Crownford Report, because I'd read that. But
and while you're pulling that up, a couple comments here.
Oh, good. Okay.
Sean, are your buyers most people planning to live in AZ, or do you work with all kinds of buyers or investors?
So most of my buyers are planning to live here. I don't work with a ton of investors. It depends on the investor, to be honest with you. Like, I've worked with investors, but it depends on the investor. So I hope that answers your question.
Yeah.
Not all investors are created equal. Let's just say that.
True. And I mean, because mortgage companies are struggling so much, they really have been aggressively pursuing these we call non-QM programs, which are non-traditional financing geared toward investors. Mm-hmm. So like, for example, there's a thing called a DSCR loan, which is super popular, where your down payment, as long as it covers what the anticipated rent would be of the property, there's no traditional income qualification,
right?
Which is really handy.
Yeah.
Put that on a t-shirt, Jim. Put it on a t-shirt for sure. I agree with you.
Always good to see your comments, Jim. I love it. Buying a house is not a day trading exercise. It should always be viewed from a long-term perspective, 100%. And it's funny because I have another client of mine, he might be watching here as well, that I always say, I'm like, buying a real estate is an investment. And he's like, I don't look at it as an investment. I look at it as a savings account.
True.
So,
well, it's funny when you think about that 1% number, like, hey, what if prices go down 1%? Well, I mean, 99.9% of my clients are going to do an amortized loan.
right.
You're paying down principal. You're buying ownership, even if 0% appreciation. That is your forced savings plan, where you can get to 1% very quickly just based upon that.
Yeah. So Greg asks, what are the differences in loan terms and rates for a primary difference, second home, and an investment property? I answered this question already. What's your answer, Matt?
Well, I was going to say it depends. I mean, I know it's the lender's political answer, but really it depends on, are we talking conventional, are we talking jumbo? There's going to be differences no matter what, because on the primary residence is the least risk, right? The least risk. Second home is considered the second, and then of course an investment, because if it all goes downhill, which bill are you going to pay first? Which bill are you going to pay last, right? You're going to buy your primary house first. You're going to pay your vacation home second. You're going to let your investment go first, right? When we get to the jumbo, I think it was like roughly like quarter to three-eighths difference probably on when you're looking at jumbo pricing between like a primary and an investment. And I think when I priced out yesterday, I was getting down to like below, like the high sixes even on an investment property for a jumbo loan scenario, which is pretty darn good. Some investors are being a little more aggressive than others right now because, again, there is a shortage of business out there, and I work on the wholesale side. So, but yeah, I mean, it's the second home thing on conventional loans, which in Phoenix is going to be loans of less than 800,000. There is an adjustment. It's frustrating because during the pandemic, everybody bought second homes. So basically the government came in and they added these adjustments and made pricing worse for those types of homes, which is obviously frustrating.
Okay, so I'm going to share this part because I just think this is so good to see. So this is the Crownford Market Index in the 17 large cities in the Valley. Again, anything over 110 on this index is in a seller's market. Between 110 and 90 is a balanced, and anything below 90 is a buyer's market. So you can see right now we don't have a lot. So we've only got 4 right now in an actual seller's market. And we have a lot in a balanced market, or we have a few in a balanced market, and we have a lot in a buyer's market. So we're seeing things change, and it's been changing. But this is a really good thing to watch. So you can this kind of tells us where pricing is going. Not really where prices are. But then I'm just because I don't have to sit through me searching really quick. For rentals, I was going to pull up. This is just showing what we were talking about earlier. So this shows the monthly average lease price per square foot. Sorry. Hopefully, who is it? Hopefully Bebop is still watching. So you can see this. So this shows you, again, we've kind of flattened out as far as this red line is the month. So it's just kind of the 12-month moving average. So we're at about $1.37 a square foot for leases. But you can see this huge spike. And now it's just kind of flat. But I mean, I would tell you that the same thing is going to happen with leases that happens with sales. The better the house is, the better you can, or the more money you can get for it, Absolutely. So what else was I going to look for in here, Matt? Sorry.
Oh, we're talking about the Crawford Market Index. I thought that was interesting because you can see that we are not in historically what we call like an extreme buyer's market, right?
No.
We're in, and you can see that it's a really nice chart. What I had pulled up here, and actually I have it if I could hit.
If you want to share, go for it.
Sure. Let's see here. Present, share screen. Okay, can you see that?
No.
Let's see. It's sharing a window. I'm showing it. Oh, if I do that, you see that?
Nope.
Right. Okay, it says I'm sharing a window.
Which one are you? Which one are you on? Sorry, here.
I hit present, so maybe I should at least stop sharing. Present, share screen.
Yep.
Share screen.
Here, now you should be able to do it. Maybe because I was doing it before.
Oh, okay. See if
I'll do that. While you do that, I will. So Jim asked, looking at the report and connecting the building projects that are being announced, it is no wonder that cities like Gilbert and Queen Creek are dropping. Increased supply will continue to help buyers. Agreed. And that's the thing. Like when you look at that chart, if you look at where the cities that are in the biggest or the most of the buyer's market, they're all on the outskirts, right? And it's all because all of that building is going on out there. And so all the new construction, most of the new construction is out there. The thing though that I will say is that there's some YouTubers out there that love to talk about all of these new home construction areas that are just sitting with all of these vacant homes and how that is crashing the market. If you really go around and look at those communities, they do not have a lot of homes that are built just sitting vacant. There are some, I'm not going to say there aren't any, but there's not full built neighborhoods that are done with nobody living in them, which is what some of these YouTubers want you to believe. And I really believe that the reason is because when in 2007, 2008, I mean, these builders got burned hard. So they will not do that again. I can put you up here, Matt, now.
Okay, perfect. So this may look like a bunch of squiggly lines, but it's really not. So essentially, guys, what this is, the Crownford Market Index is a current indicator showing who has the upper hand, buyers or sellers. So from 90 to 110, nobody has the upper hand. It's just basically we're right there in the middle of the market. But once you go over 110, it is considered a seller's market. When you go below 90, it is really considered a buyer's market. So each year here is represented from 2020, and actually now there's 2021 too. But if you look at 25, that is the actual bottom one. So the Crownford Market Index going back to 20 is the lowest that we have been. And we are presently at a 98. So even then, we're still in that window of 90 to 110, okay? But buyers definitely have the most upper hand that they've had in a very long time. And what's interesting is even going back to January, we hit in the 120s, which is technically a seller's market, but it's a very moderate seller's market. This has lasted now for a while. A lot of our quote unquote buyer's markets are very short windows. We've had a few extended windows in the last 20 years. This appears to be a bit of an extended window that will close obviously at some point, right? But if you want to look at historicals, like just to compare, like 2020 is this line right here. I mean, the Crawford Market Index to 436.
That was so crazy.
Okay? Yeah, interesting time. So even compared to last year, though, you can see there is opportunity. So based upon these numbers, we can project what is going to happen in our market. And the interesting thing is, this is a not crazily priced service, and yet very few agents subscribe and actually use this service. But it has accurately predicted many trends in real estate in the last 20 years.
So yes, Jim.
1000% yes, Jim. I think
what we know, I think that from history or from even the last just 4 or 5 years, we hit 6.5%.
Yeah.
Game changer.
And 6% frenzy.
Yeah.
I can say 599. Yeah. Completely agree. And then the interesting thing about this time is we've had so many types of buyers sitting on the sidelines. It's not like it's one segment, right? It's move up, move down, first time. So the Kraken will be released when if we hit 6%. Yeah.
Yes. I want to pull up this because this was also very, very interesting. So these are active listings. So this is weekly. Every dot is a week here. And if you look at this, all these people are saying, oh my gosh, look at our inventory skyrocketing. It's skyrocketing. It just keeps going up. But then look at this right here. I don't know if you can see, right? What week are we in? What week is this? April 26th. So since April 26th, we've gone kind of flat. And then at the end of May, the end of May, it started coming down. So could some of this be seasonal? Possibly. But I also think that we're going to see this continue to I don't think it's going to, drop down drastically, but I think we're going to kind of see this come down and maybe flatten out again. So I think that is another inventory not just continuing to skyrocket is going to have an effect on our market overall. And I see it. I've had buyers that we've been looking now for a couple months, and some of we saw some things like coming on the market, and we would go take a look at them. And then next thing you know, they're off the market. They've been sold. And there's not a lot of new things for us to go take a look at.
Yeah, which is frustrating.
It's frustrating. So, so here I'm gonna switch over to another article because this is something else that we are seeing. This website. Sorry, guys, if I get a bunch of pop-ups. The market crashing before our eyes. Buyers are backing out of deals in record numbers amid restlessly high interest rates. So I've seen cancellations. Our cancellations are higher. We'll get into the Crownford Report. I'll show you. But I love this. It says, power up the flux capacitor, climb aboard your DeLorean, and prepare to travel back to 2008 because recent headlines concerning a real estate market crash seem very familiar. I disagree with that wholeheartly, but it says the main difference between today's imploding market and that of 17 years ago were that 2008 bagged mortgages and overinflated house prices. That of 17 years ago were that in 2008 bagged mortgages and overinflated house prices were the issue. Today, high interest rates, soaring insurance costs, economic fears, and stubborn inflation are the primary problems. The result, however, are pretty similar. Much of the U.S. is becoming a buyer's market, according to the recent report from Redfin. 14% of all transactions were canceled in April. The numbers are shocking. In April, 56,000 home purchase contracts were canceled, just over 14% of all pending transactions, Redfin reported. Not since the early days of the pandemic have so many deals failed to get to the finish line. We see a lot of deals collapsing, especially in major markets like Las Vegas and Phoenix. It's especially first-time home buyers. Some are losing their jobs. Others simply no longer qualify for loans because they don't make enough money or don't make enough or have good credit. Realtors are asking sellers to accept the truth. The market is crashing before our eyes. I don't.
Yeah, and a couple of things. Number one is unemployment's not even an issue in Phoenix.
Unemployment nationally is like 4.3 right now.
Yeah, nationally, yes. It's like
and Phoenix is lower than that.
We're like 3 point something, 3.7. 3. Yeah, that's not even remotely an issue. And I think, there probably are some first-time home buyers backing out of homes that took a year or two to build, anticipating that rates were going to be lower. And the affordability is an issue for those people, right? In my experience, the reason for cancellations is not fear of a housing crash. It's just, you're dealing with some unrealistic sellers that think it's okay to sell a house that needs a new roof or the air conditioning isn't working, like things like that.
Yes, I've seen that. And more recently, sellers are having to accept offers contingent on the buyer's house selling.
Correct. And then, right. And that's a cancellation right there. Yes. Great point.
And I've had one that canceled because they had an offer on their house. Their offer then canceled. And then we had to cancel the one on their house. So will they come back? Yeah, they'll come back as soon as they get another offer on their house.
Right.
So again, I look at that like, is it a cancellation? Yes. But could they come back? Could they end up buying the same house if it's still on the market? Maybe.
Right.
You know, so yes, cancellations have been up. However, that article's tough because they just want to start talking about crash. And I don't believe our market's crashing.
Well, yeah. And I think a lot of it's due diligence. Like I know that one of your fortes is that you really have a comprehensive inspection program, right? When you get somebody under contract. So It's like, you have to do that, right? Like there's plenty of people that are just flying by the seat of their pants and all of a sudden, they last second inspection, half-assed inspection. And they're like, we have all these major problems. Like, I mean, it does happen, but you have to do your due diligence.
Right. So here is the Crownford Report, right? With canceled listings per week. This is in every price range. So the price range it matters. So week 23, I know this is a little behind. And I hate that they do this because week 23 doesn't tell me what month or where we are. But here is, so if we do some of the lower price points, right? Let's just go to 250, 100 to 250. This is where we are. We're the light green. 2025, we're the light green. And a lot, I would say in that price range, some of those people are probably going to be investors that are looking for something that they can not flip necessarily, but something that they can buy and maybe turn into a rental. This is 250 to 600. You have a lot more, almost 300. Then if we go 600 to 1.5 million. Oh, here, let me go to 1 million. To 1 million. There's 115. So there's more in these areas. And then if we go to 1 million to 2 million, 62. And I would say that sometimes in the higher price points, 2 million and above, and there's 41. So I would say that some of the reasons that the higher end home, the higher priced homes cancel is probably because there's some major work that needs to be done. Stuff like roofs that need to be replaced and, things like that. Excuse me. And that sellers sometimes are going, I'm not doing it. And the buyers go, okay, then you can sit, the house can sit for a little while. So it's just an interesting thing. Let me pull. I don't want to, when I start searching for these charts, sometimes I don't want you guys to have to look or watch me fumble through these because they're all labeled as an analyst, not as somebody that like, oh, that makes sense. So sometimes I have to look at a few different charts before I find the right one. Here's another interesting one. This goes along with what we were talking about with sellers. And it's price changes.
That's a good chart.
Yeah. So you can kind of see the number of price changes. We had a little June 1st, and you'll see this in the summertime. Again, you'll kind of see down here. This is December, January. That's normal, or right in here, January. But you'll see this kind of in the summer too. Sometimes where people go, oh, I want to just cut my price and hopefully get it sold through the summer. But I mean, we're definitely seeing some price drops. I mean, if you guys are looking at anything, you see the number of price reductions that you get notifications for. So price reductions are definitely happening. But in my opinion, again, I'm just going to say this. I don't know that some of the price reductions that we're seeing are enough on some of them. So it's interesting. But we are definitely in a buyer's market right now. And things are shifting, but I would say to the question, like too many sellers and no buyers. We definitely have buyers and people are moving here. We have a lot of new businesses that are here now, people that are bringing in high paying jobs. So we've got people that are moving. I've got a lot of people that are moving here because of jobs.
Yeah, for sure.
So that has shifted a lot of what our market is and what people can afford. So again, I'm not saying that affordability is not an issue. It is for some people, but it's not everybody. And it's not just people coming from California. So that's the other question I always get. I was like, oh, well, it's just the people coming from California. It's not. I don't have people just coming from California.
No, and I think there's a increasing number of jobs that can, full-time remote as well.
Well, and that's the other thing. There's been a lot of articles lately about, the remote working being stopped, people having to return to work, that's having an effect on home sales and things. I haven't had that or seen that too much here, people being called back to work. I do have a client though in Idaho, and he told me, he's like, we are seeing a lot of homes hit the market in Idaho now from those the places that people moved from, and they're being called back to work. And so the inventory in Idaho has spiked a lot because of that.
Interesting.
Yeah.
A lot of destination vacation places, I think could be potentially hit.
Yeah, for sure. For sure. Well, Matt, we're going to have a hot week end, and it's Father's Day.
Again.
Happy Father's Day to everybody.
Thank you.
Yeah. Happy Father's Day to everybody.
Have a great Father's Day.
Yeah. If anybody's watching that is not in Arizona, there's a link down below that if you need help finding somebody that's, a real estate agent or whatever, there's a link down below. I can help you with referrals. I can help you find the right person. Yes. So just because
and also Jillian from Virginia, from my neck of the woods, please feel free to reach out to us.
Absolutely. Absolutely. Thanks everybody for joining, and we'll see you next time. Bye everyone.
Bye, everybody.